Good morning, everybody. I'm the CFO of Red 5. Red 5 has recently built King of the Hills, and first gold was in June last year. King of the Hills is one of the largest long-life gold mines in Australia, and it's 5 years since we saw such a mine of this scale built in Australia, which was the Gruyere Gold Mine built by Anglo Ashanti and by Gold Road. It's also another 5 years before we can expect another gold mine of this scale, which is most likely to be De Grey. So King of the Hills is quite unique, 15-year mine life, 200,000 ounce per annum production. Similar to the Gruyere Gold Mine, in its first year or two it had its challenges ramping up. Unfortunately at King of the Hills we've also had challenges, but since February when we completed the cutback and got into the primary ore body in the open pit, we're now seeing consistent monthly record production, generating positive cash flow, and we're well placed to deliver on the operational promise that we had when we did the original studies for King of the Hills. Our cash position at the end of March is $23 million. In April we received another $32 million as part of the second tranche of a capital raising we did in February, which puts us in a very strong position now. By the end of June we'll have reduced our debt facility to below $130 million, having paid over $45 million to date, and we should have a net debt position by the end of June of less than $100 million for the first time. A share price has suffered during this ramp-up period and has tested the patience of our shareholders. We're very fortunate to have a very strong register. Our top 10 shareholders include Australian super funds, North American, European major institutional funds, plus the Victor Smorgon Group based out of Melbourne. King of the Hills is based on an enormous granodiorite intrusion. It's 4 kilometres long, 2 kilometres wide. It's been mined before. We understand the geology very well. It has a resource of 4.75 million ounces and a reserve of 2.7 million ounces, which underpins a 15-year mine life. The ore body remains open at depth and along strike, and once we get through the next 12 months of generating strong cash flow, getting the balance sheet in a stronger position, we anticipate investing more in growth exploration at King of the Hills and building on that resource. We've built an enormous Sag Mill. It's a single-stage CIL circuit. It was designed originally to be 4 million tonnes. Its throughput, it's now doing 4.8 to 5 million tonnes. In the coming months, we expect to take that up to 5.5 million tonnes. So since we've been feeding the hard rock from the open pit since February, that mill itself is like a Ferrari, and it's been all designed to process this hard rock, and it's really humming along now. The site is powered by a 30 megawatt power station. It's a hybrid gas solar power station. 15% of the energy comes from renewable energy. We're 10 kilometres from the Goldfields gas pipeline, and we get access to cheap gas that gets piped down from the northwest shelf. I'm the CFO, so I get excited when I see a slide full of graphs, but this does tell an important story. In the top left-hand corner is the open pit. Mined tonnes since July last year. We were expecting, the plan was to be onto the primary ore body in October, but due to starting up during COVID and post-border openings in WA, we had huge levels of absenteeism, and ever since then we've been trying to catch up with that cutback in the mine. But you can see from February onwards, we're now in the high-grade, large contiguous zones in the ore body and producing this hard rock that the mill loves. We saw that in February, we saw that in March, we saw that in April, we're seeing that now in May. And for the next 15 years, we'll be mining on this contact, which is where the main ore body sits. In the underground, in the bottom left-hand corner, it has been a big concern for us internally. The underground should be doing 80 to 90,000 tonnes per month for the first 6 months, for similar reasons to what I described with the open pit. We were struggling at 40 to 50,000 tonnes per month, but since March we've seen that step up significantly to 80 to 90,000 tonnes as intended. And full credit to our mining team and our contractor McMahon's in the underground. On the right-hand side is the production graph. Again, you can see steady improvement quarter on quarter, working through the issues that we had in it, both feeding oxide from the cutback, but also the mill issues. Since March, where we produced 17,500 ounces, April we produced 18,500 ounces. We're now starting to see that steady rate that King of the Hills should be producing at. We're now producing positive monthly cash flow since March. And again, just having that hard rock coming out of the open pit is crucial now to the optimal performance for the mill. Again, since February, we've started to see recoveries improve significantly once we start feeding this hard rock. Recoveries around 94 to 95% relative to the feasibility study design of 92%, which is really, really promising. This slide is just to give you a visual. The picture is interesting, but the benches in the graph on the side is most insightful. You can see at 10 metre bench levels working our way through stage one of the open pit. The first 50 to 60 metres in the open pit, we're working through that oxide and transition as we're cutting back. But since the 52.35, 52.25 bench levels, we're now getting these large high-grade zones mined and getting fed into the mill, and we're building significant stockpiles with high-grade ore in front of the mill, at least a month's worth of high-grade ore that's in front of the process plant. And we're working our way through these benches over the next 12 to 18 months, and then we will start to see we'll start to be mining on the contact of stage 2. So this chart shows the full pit. Over the next 15 years, we work through 5 stages in the pit, and the strategy is to always be mining on the contact. So always on the primary ore body, always feeding that high-grade feed to the mill, but at the same time progressively doing cutbacks of subsequent stages for the mine. I mentioned earlier about the underground. Again, we're now hitting the productivity we expected. We've completed in the process of developing into the new fresh zones of Regal, West and East, which is giving us much better stope performance, moving away from remnant mining, getting the productivity we need and getting us the predictable grades that we need from the underground. One of the key strategic features of King of the Hills is the process plant that we've built. It has a processing cost of $12 per tonne, which is half the processing cost of most of the similar size mills in the district, and a quarter of the cost of what it is for a small 1 million tonne process plant in WA. 30 kilometres down the road is the Gwalia mill, which is $45 to $50 per tonne, which is very high cost, but what it does imply is for regional consolidation, the King of the Hills process plant with a $12 per tonne is a key driver to unlocking real value, real cash savings by putting ore through King of the Hills. It's already a processing hub. We're trucking ore from our satellite mine at Darlow, 100 kilometres down the road from the underground, and processing that through King of the Hills. And I'm sure in 5-10 years' time we'll see similar other high-grade ore sources coming and being processed at King of the Hills. Final slide, I think I'm ahead of time, but the final slide is just to demonstrate the value relative to our peers. Again, we have suffered through this ramp-up phase. We are now getting positive cash flow, great performance out of the mill and mining on the primary ore body in the open pit. Today, on an enterprise value to ore reserve basis, we're valued at roughly $250 per ounce. We compare that to our mid-tier gold produced peers. The obvious example is the Gold Road example I gave you before. Single asset, 150,000 ounces per annum, 15-year mine life. King of the Hills, 200,000 ounces per annum, 15-year mine life. They've achieved steady state after 3 or 4 years, and it valued at $700 to $800 per ounce compared to King of the Hills' $250 per ounce. So we've completed the construction, we've de-risked through the ramp up, we've got through the teething issues that we've had. We're now generating positive cash flow, and I think it's reasonable to expect that we will eventually start to be valued in line with some of our peers. So hopefully that's insightful, hopefully it's contemporary, current information, and gives you something to think about with regards to Red 5. Thank you.